Hey everyone, welcome back to Corporate Decoder, where we dive deep into the nitty-gritty of company filings to uncover the real stories. And hey, if you want to stay ahead of the curve on corporate finance and strategy, make sure you subscribe and join our Discord community, linked in the description below. Today we are looking at a very interesting 8K filing from Antero Midstream Corporation. Now, an 8K is like a company's quick announcement system for big news, and this one is packed with some pretty significant financial moves. So Antero Midstream Corporation, they are a big player in the energy infrastructure space, basically owning and operating pipelines and storage facilities for natural gas and oil. They are crucial to getting energy from where it is produced to where it is consumed. The main event here is a massive debt offering. They've just issued $600 million worth of what they call senior notes due in 2034. Think of these like long-term loans that the company promises to pay back with interest. This offering was actually bigger than they initially planned. They originally wanted to raise $500 million. But they upsized it to $600 million, which tells us there was a lot of investor demand. Now here is where it gets interesting and a bit risky. This big debt issuance is tied to a major acquisition they are planning. They are buying HG Energy 2 Midstream Holdings, LLC. If this acquisition does not go through by a certain date, which is the 2nd of September 2026, they have to pay back all $600 million plus any interest that is piled up. This is called a special mandatory redemption. It means investors are protected if the deal falls through, but it also shows the company is putting a lot on the line to get this deal done. To make this debt offering happen, they entered into an indenture. An indenture is basically the contract that lays out all the rules for these bonds. It covers things like how and when they have to pay interest, what happens if they miss a payment, and other important promises they make to the bondholders. It also includes customary terms. Events of default and covenants relating to, among other things, the incurrence of debt, the payment of dividends or similar restricted payments, undertaking transactions with the issuer's unrestricted affiliates, and limitations on asset sales. So this is a pretty standard but crucial part of any bond issuance. And this debt isn't just on the books of one part of the company. Several of Antero Midstream subsidiaries are acting as guarantors. This means they are all on the hook if the main entity cannot pay. It spreads the risk, but also means that if one part of the business struggles, it could impact others. These guarantees are on a senior unsecured basis. That means they are important promises, but they are not backed by specific company assets. This $600 million offering was not available to everyone. They sold these notes mostly to big institutional investors like pension funds and investment firms in the US and to international investors outside the US. This is a common practice for large debt offerings, as these investors are typically sophisticated and can handle the complexities of these types of investments. Now let's talk about how Antero Midstream can choose to pay back this debt early. They have a few options before the 1st of January 2029. They can redeem up to 35% of these notes. This means they could buy back a chunk of the debt before it's due. They can do this at a price higher than the initial amount, plus any interest they owe. However, this early repayment can only be funded by money they raise from selling more stock. This is a way for them to manage their debt if they have excess cash from other sources, like a successful stock offering. When it comes to getting paid back, these new notes are treated the same as other senior debts the company already has or might take on in the future. They are also ranked higher than any debt that is considered subordinated, meaning those debts get paid back only after the senior debts are fully satisfied. However, and this is a big but, these notes are effectively lower in priority than any debt that is secured by specific company assets, like those under their revolving credit facility. This means if the company faces trouble and has to sell assets, the lenders with secured debt get paid first from those asset sales before these note holders get anything. The filing also mentions that with this new debt in place, some of their previous financing arrangements are now cancelled. Basically, they have this new, bigger chunk of money, so they don't need those older credit lines anymore. This is typical when a company restructures or secures a large amount of funding. And finally, the filing includes the actual indenture document as an exhibit. This is the nitty-gritty legal contract that lays out all the terms and conditions for these $600 million in notes. It is important for anyone who wants to understand the precise details of this debt. Now, let's put on our investor hats and see what this all means. Antero Midstream is clearly making a bold move to expand its business through acquisition, evidenced by this significant increase in their debt. The fact that they upsized the offering suggests strong investor confidence in their business model and the planned acquisition, which is a positive sign. However, the reliance on a successful acquisition and the potential for a special mandatory redemption highlights a key risk. If the HG Energy acquisition doesn't pan out, they have to scramble to pay back a huge sum of money, which could strain their finances considerably. This structure is sometimes used to appease investors who might otherwise be hesitant about deals with uncertain outcomes. The ranking of the debt is also something to note. While it is senior, it is not secured. This means in a severe financial downturn, bondholders are not in the best position compared to those holding secured loans. The company's strategy seems to be growth through acquisition, funded by a mix of debt and likely asset sales down the line. Given the mention of the Utica disposition, their ability to effectively integrate the new assets and manage this increased debt load will be critical. So, in conclusion, Antero Midstream is taking a significant step to fuel its growth. They have successfully raised considerable capital, but this comes with substantial conditional liabilities tied to their acquisition plans. The company's leadership is betting big on this expansion, and investors will be watching closely to see if this gamble pays off. Are they building a stronger, more resilient company, or are they taking on too much risk too quickly? Only time and the successful completion of their strategic moves will tell. What is your take on this debt issuance and Antero Midstream's acquisition strategy? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more. And again, make sure to join our Discord community for deeper discussions and a chance to connect with fellow finance enthusiasts. Thanks for watching, and we'll see you in the next one.